After falling into bear market territory back on Friday, we're looking at the Nasdaq now and dropping another 140 points on Christmas Eve alone. That was on Monday. The tech sector is leading today's market rally. The Nasdaq is currently up 5% to the upside right now at 65.03. Many of the tech titans that we like to watch every day, the Facebooks and Amazons and Netflix, they are in bear market territory. But what does this mean for the sector in 2019? Because these were the momentum plays in very popular stocks. Let's bring in Colin Gillis of Chatham Road Partners with his outlook for tech in the new year. What do you think, Colin? Do you have hopes for the popular tech stocks, the Facebook, Amazon, Netflix, Alphabet?
Absolutely, Lauren. You know, the key to remember is, right, FANG is not down and out. There are still ample opportunities to make good investing decisions, but we're going to get volatility, right? 2019 is going to be the year where you still have a good economy, you still see growth in both revenue and earnings, but stocks are going to behave volatilely.
Yeah. What do you make of the rally we're seeing today for stocks overall, but particularly the Nasdaq?
Yeah, I love it. You know, and once again, you have the American consumer, right? You know, showing that there's a strong backbone and driving results for investors, right? A big chunk of this rally is based on the Amazon news showing that the holiday commerce results are extremely healthy. Right? We're talking 1 billion items shipped via Prime. So, you know, great news from Amazon. Last night, many people, a lot of investors were worried what today was going to bring, right? What this market was going to bring. So it's well-timed news from Amazon to help deliver and lift up these names that have been, you know, battered, particularly on Christmas Eve.
And if you look at the bull market, which is 9 years and plus in the running, the Nasdaq is actually up like almost 400% in that time. So a lot of folks are saying it just makes sense for the market to cool off. I want to go through some of these popular trades, and you give me a ho-ho-ho or a ho-ho no. We'll start with Apple. What's your sentiment for 2019?
You know, unfortunately, Apple is a great company, but from an investment angle, I say ho-ho no. Because you look out, you see a company that is just dependent on their hardware sales of iPhones. And there's a lot of enthusiasm for their software and their services revenue, but I don't believe that that's going to make up and grow fast enough for any decline that's happening on the hardware side. Right. Plus, the capital return and the share repurchasing, it's nice for now, but it shows that there's a lack of investment idea. So ho-ho no to Apple. Yeah,
and they also spooked the market when they said they weren't going to break out those unit sales anymore. Okay, I know you're positive on Amazon, but if you were talking about services with Apple, well, Alexa is expected to be a tremendous part of Amazon's future and their overall revenue. How bullish on Amazon are you?
Yeah, Amazon is up there in my top two picks, right? So, you know, if you want to have a company that's going to be around for, you know, the next 30 or 40 years, you really can't do any better than Amazon.
Netflix?
Netflix, you know, I'm concerned about Netflix. I'm going to give it a ho-ho no. I know it's having a strong day today, but they're pumping in money in their own content, and when you get in the content game, you're always dependent on your next hit.
Yeah, and it's billions and billions and billions of dollars of expenses. What about Alphabet? Because like many of the tech companies, there's a lot of privacy issues and perceived bias, anti-conservative bias on the site. What are your thoughts on Google?
You know, I look out at Alphabet, I think about Google, and I say to myself, is there any other company, you know, possibly outside of Amazon that has the human intellectual capital that Google has been able to amass and has the current revenue streams and the future revenue streams? And I say no. Right? This is a company that has 8 products with over 1 billion users each. So you see near-term revenue streams from their current product suite, right? You see, you know, future revenue streams from their AI, from their driverless cars, right? From YouTube TV, right? A whole suite of products. They are incredible at producing software that adds value to our life. Ho, ho, ho.
All right, but Colin, we've got regulation perhaps coming down the pipeline. You got digital taxes in Europe. These are certainly headwinds for Google.
They are, but Google does a much better job about being transparent about what it does, right? You get these products, quote unquote, for free, but there is a value exchange that's being done. You are the target of advertising, and that's Alphabet's business model. So I think they do a better job of transparency than, for instance, Facebook, which has been disappointing consumers.
Microsoft has been the winner this year. It's one of the only stocks that we were just talking about to not fall into that bear market territory. What is Microsoft doing so right?
Microsoft is focusing in on its core audience. It's not chasing down after the consumer market, which it did very much so under the former CEO, Steve Ballmer. It's trying to play to its strengths, which is the corporate marketplace. It's been more strategic with its acquisitions. Historically, they've got, the Nokia acquisition. They have a lot of blunders.